Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
FSN. It's about what's next. What do these 5 countries have in common? Venezuela, Argentina, the Ukraine, Thailand, and Turkey. Well, we got John Rubino of DollarCollapse.com to talk to us about it. John, welcome back.
Morning, Kerry.
Hey, so those 5 countries, and probably there's a lot more countries out there, got serious problems going on, probably related to the money bubble, huh?
Definitely related to the money bubble. You can also add in the Arab Spring of the last couple of years on this list, because it all, or most of it, can be traced back to the fact that over the last decade or so, the developed world has taken on too much debt and has tried to deal with that debt by creating a lot of new currency. We pushed interest rates down to near zero. We've run the printing presses flat out. And a lot of that hot money thus created has flown into the developing world. And that's a mixed blessing when the money's flowing in, because it bids up asset prices and equities and bonds and makes the elite feel rich, but it also increases the cost of living. Energy and food prices go up, which means that the 95% of people in a lot of these countries who were just getting by before now all of a sudden can't afford to live. And that's a prescription for civil unrest, and that's what you're seeing in the least well-run parts of the developing world. So, Latin America, Venezuela, and Argentina are obviously really badly run, and we're seeing serious civil unrest there. And then Turkey, which is used to be thought of as the Islamic world's success story, is being engulfed in civil unrest. And the reason for that is that people are pretty docile when they're getting by. And as soon as they can't feed their kids, everything changes. And that's what we're seeing. And it's not their fault. That's the horrible part about this is they really don't have control over capital flows, because the global financial system is so much bigger than, say, Turkey's central bank or Thailand's federal government, that they can't control their destiny when it comes to their finances. And we, by fighting a currency war in the developed world, are turning them into collateral damage. And it's only going to get worse, because we are only going to increase the amount of new currency that we're creating and sending out into the world as our debt problems metastasize in the developed world. So what we're seeing now is just a taste of what's probably going to come.
And at some point, it's going to reach a saturation point or a tipping point. And then what happens?
Well, then we see instability increasing to the point where a lot of these countries can't pay their bills and start defaulting on their debt. And then it becomes a global crisis. Then, in other words, the blowback bites us, and we start really paying attention, because when our big banks, who have lent huge amounts of money to the developing world, because that was the hot asset class of the last 5 years, when they start seeing their bad loan statistics go through the roof and having to take huge write-offs and becoming capital impaired because of that, then it's our problem. And should that continue, then we get something like 2008 again, where the big banks have a major crisis, which bleeds into the stock market, which bleeds into government finances, and you see the whole thing start to unravel. So we're looking at something like that in the not too distant future, if current trends continue.
Mm-hmm. And then the next 2008 is going to be far worse than than 2008 was, right?
Well, these guys in the developed world central banks have only one policy tool left, which is extremely easy money. So they're going to respond to the next crisis as they've responded to the last 5 or 6 crises, which is to cut interest rates even further, maybe into negative territories in Europe and Japan and the US, and dramatically increase their variance on quantitative easing. Each country calls it something different, but it's all the same thing, basically. They're buying in debt, and they're pumping newly created currency into the banking system. So we will see bigger, more aggressive versions of that in response to the next crisis. And so then the question is, how much is too much? At what point do the asset markets out there realize that the world is so awash in paper that's not backed by anything that asset prices start going through the roof? When real things become more and more expensive because nobody wants to hold on to their paper currency anymore, and they want to buy farmland and oil wells and gold bars at any price, then you see the fiat currency regime of the past 30 or 40 or 50 years start to break down. And so it's not a question of if, but it is a question of when. At what point do the numbers get so overwhelming that the system stops functioning as it has in the last few years? And there's no way to know that. We know we've created the conditions for it, but we can't say whether it's this year or next year or 5 years from now.
It's when confidence is lost, right?
Exactly, because fiat currency exists strictly as an artifact of the confidence that we have in governments to manage these currencies competently. And as soon as that faith is lost, then a paper dollar goes to its intrinsic value, which is basically zero. And same thing with euros and yen. And eventually the concept of fiat currency, we'll eventually realize that it makes no sense to give a printing press to a government, that concept is fundamentally flawed, and we'll stop it. But the kind of crisis that we have to bring enough people around to that point of view is staggering. So we won't get there painlessly because most people either like the status quo or really haven't thought about it. And so something serious has to happen to spark a debate in the mainstream about the nature of money and the inherent corruptibility of humans, especially when they're in a government, and how that all ties together and what we should do going forward. And we'll eventually come around to the point of view that the framers of the U.S. Constitution were right, and that money should be sound, that is gold and silver, and the government should absolutely positively not have the ability to create unlimited amounts of paper currency. Getting from here to there will be incredibly painful. And, as individuals, all we can do is try to figure out how to structure our finances so we're not hurt badly by it and maybe make some money along the way.
It's like giving a loaded gun to a child or like giving Justin Bieber a fifth of scotch and the keys to the Lambo and expecting a positive outcome, right?
Anybody with kids knows that human nature is inherently corruptible, and people in large groups, especially organizations like governments, tend, in the aggregate, to regress. A crowd is something a lot more primitive than an individual, and so you take a government, which is basically a crowd of people handed extraordinary power in return for, in theory, responsibility, and you give them basically power that is unaccountable, as is with a printing press in the hands of a government, and you're going to get corruption. They're going to use the printing press to get reelected, and since there's a new election cycle every couple of years, they're going to use that printing press basically continuously, and you would expect that based on a knowledge of human nature, and you would expect that to result in a system where debt grows every year, and new currency has to be created to cover the debt, and inflation starts to accelerate, and we got exactly what you would expect theoretically.
And it's been going on and on like that for so long. And look, if you're not having a major event, a little bit of pushing on the monetary accelerator isn't going to do you that much harm. But when you have a 1929 event or a 2008 event, and then you really step on that accelerator, it really causes all sorts of mayhem, doesn't it?
Well, it leads to an even bigger increase in total debt, which eventually blows up on you. You can't borrow money continuously forever, whether you're a family or an individual or a country. It works the same way for everybody, that if you take on more and more debt each year, that eventually you reach the point that you can't cover the related interest. or that you have some kind of a hiccup, like in the case of an individual, a lost job or a leaky roof or whatever, or in the case of a government, a financial crisis or a natural disaster or a war that requires a huge amount of new money, and you find out you don't have it. You can't finance this unexpected expense, and then you have a huge crisis because not only is the immediate problem, like the war or the natural disaster, onerous, but it magnifies the financial problems that you've been creating all along and being able to cover up with newly borrowed money. So you get something that's way bigger than the immediate cause should have been. And that's the kind of conditions that we're creating. 2008 should have been very easily manageable in a healthy system where you have a few banks go bust, you let them go bust, their shareholders take a big hit, and then you move on. That's what a healthy system would have done with 2008. But because we were already grossly, ridiculously over-leveraged, the crisis within a few banks and within the housing market became a global financial catastrophe waiting to happen, and we had to borrow $10 new trillion. Or actually, it was more like $25 new trillion globally in order to stave off the crisis. And so the next time around, maybe it's 30 or 40 or $50 trillion that we would have to borrow. So the question becomes, can we do that? Will we be able to take on $30 trillion of new debt the next time a big bank's derivatives book blows up? Or the next time, go ahead.
Of course, we'll try to do it, but what's going to be the result?
Yeah, well, we'll try. I mean, that's kind of a given that we're going to respond the same way to the next crisis that we've responded to the last few. And so the question becomes, when won't that work? When does that tool stop functioning? And each time we ratchet up the amount of debt in the system, we bring that day closer. And so it might be the next time. I mean, we're talking about just insane numbers now, Kerry. I mean, that China borrowed $15 trillion in the last 5 years, which is the size of the entire U.S. economy, is pretty amazing. I mean, historians are going to have a field day with that one statistic. And that the rest of the world is creating new currency at about that rate. If you look at the rate at which the U.S. and Japanese central banks are increasing their balance sheets, which is a measure of how much money they're pumping into the system, you get basically the same thing. You get 10 or 15 or $20 trillion of new currency being pumped into the system every 5 years. And how long can that go on? It doesn't seem like it should have been able to get to this point. We should have blown up by now. And so the fact that we haven't means that there's something going on that might allow us to go on might allow this strategy to continue for a while. But it also might end tomorrow. There's no way to know. We've created conditions in which what can't go on won't go on, but we just don't know the date.
Well, it's going to stop, but like you said, it'll go on till it stops. I want to talk about Bitcoin up next on the Financial Survival Network. I'm Kerry Lutz.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
And we are back on the Financial Survival Network with John Rubino of dollarcollapse.com. So, John, we've had this Bitcoin discussion before. You and I love the concept of letting the market pick an alternative currency or currencies. It's so Austrian economics, right? And leave the government out of it. Just let the market choose a currency. And if it doesn't like greenbacks because you printed too many of them, and it doesn't like yuan, and it doesn't like euro, the market will find something, right? And forget legal tender laws, because that's what helps rig the system. So we got these things, Bitcoins. For those of you who don't know, it's a digital cryptocurrency, and I don't know what that means, but Trace Mayer explained it really eloquently at the Liberty Mastermind Symposium. So you buy and trade these things. But now, John, it looks like that thing is blowing up. The experiment maybe is this science project's going to be a failure.
Well, Bitcoin is basically the first of a series of cryptocurrencies that have been created and have begun to spread. Bitcoin got very big very fast. And it's natural that when a concept is this new, that it's going to have some flaws that weren't apparent initially. And so, yeah, there are turning out to be some problems with Bitcoin technically, which I'm not competent to explain. But it did cause Mt. Gox, one of the big Bitcoin exchanges, to basically cease to exist here, which cost the people who were storing their Bitcoin with Mt. Gox a lot of money. And so that has shaken confidence in Bitcoin as a concept. So we'll see how it all plays out. I think the idea of cryptocurrencies, that is a currency that functions outside the scope of national governments and gives people a way to buy and sell that doesn't require dollars or euros or yen, is really interesting. And I think that these things will be a force in the global financial system going forward, but that there's going to be a shakeout period in which we see the flaws be discovered and then fixed. And so if it's not Bitcoin that turns out to be the one that really challenges the current global financial system, it'll be something else. You know, the idea has come, and it's going to expand, and it's going to be a very interesting process. And I think it plays into the idea that markets should decide what is and is not money, as you said. And the main beneficiary, I think, of Bitcoin's current problems is gold and silver, because people are figuring out now that there's a difference between money and currency. Bitcoin is a currency. It's a medium of exchange. But it's not a place to keep your life savings, because if it's stored in an online service or on your computer hard drive, it can just vaporize. And because of that, it's not money. It's not something that you put away and you know that 50 years from now, when your kids are ready to retire, it's still going to have some intrinsic value that is comparable to what it has today. That's what gold and silver have done for the last 3,000 or 4,000 years, you know? And so people are going to start to make that distinction, and they're going to be more likely to want to keep their non-dollar, non-euro, non-yen wealth in something with a track record of holding its value in the long run, like precious metals. And they may still want to transact in something like Bitcoin or one of its successor cryptocurrencies. And so we'll see the market kind of bifurcate that way, where the people who don't want to be associated with national fiat currencies are going to return to gold and silver, but at the same time remain interested in cryptocurrencies and be willing to adopt them when those things prove out as something that's stable and that can be trusted.
Yeah, I agree with you. It's the emergence. This is a nascent market, and I think the all those speculators got on board, so it really became more than a currency. It became a craze, a fad. And that's what you really need to know. And also, look, a lot of people, a lot of you out there are looking for alternatives to the dollar, to the euro and to the yuan. A lot of Chinese really jumped on the bandwagon. So it became another means of gambling, of speculation, just like a derivative, just like a stock, just like an option or a futures contract. And so I think, John, it needs to evolve. So it's just like gold and silver, not so much like gold and silver in terms of protecting your wealth, but in terms of it being money. It's never going to be a store of value per se. It's never going to be have its own value. Like, you look at a Krugerrand or a Gold Eagle, that has value. It has a physical existence. Obviously, a digital currency can't, but it can evolve into a highly desirable medium of exchange. I was thinking, just for an outfit like Amazon, if they used Bitcoin in lieu of credit cards, they can be saving tens of millions, if not hundreds of millions of dollars a year in merchant clearing costs. That's a phenomenal thing for an outfit like Amazon or a small business. $10 million a year business spends $300,000 a year in merchant services for credit cards. Bankster's not going to like that.
Oh yeah. The attraction of a fully functional cryptocurrency is huge. If it works, it will be very, very attractive to a lot of businesses and a lot of individuals. But then you get into, how are governments going to respond to that? And once they see Bitcoin or its successor as a threat, then the next stage of this process begins with attempts at regulation and the NSA trying to hack Bitcoin accounts and manipulate the algorithm that controls the supply of Bitcoins. And that's a next stage issue that is also going to be fascinating. and I have no idea how it's going to turn out, but I think it's completely possible that we get there, that a cryptocurrency becomes so interesting and so widespread that it begins to threaten the monopolies that governments have now in their national monies. And they're not going to take that lying down. They're going to respond with a lot of very powerful tools that are now at their disposal. And so we'll see how it turns out. I have no idea how this all plays out, but I think that you can kind of see an example of this trajectory in file sharing, where Napster came along and threatened the recording industry with peer-to-peer music downloads. That the music industry responded to with lawsuits that bankrupted Napster, but it didn't get rid of the concept. And now, kids just download music for free. They completely bypassed the recording companies, and that has left the recording industry as a shell of its former self. So is that going to happen to national banks with their fiat currencies? Maybe. And, not a moment too soon from our point of view, right? But, we'll see how the technology evolves and what kind of a threat it becomes. And if governments can't control it, and they haven't been able to control file sharing for music and to an extent for video, then maybe money becomes something that exists out, or currency becomes something that exists outside the control of governments. And that would be a really interesting world from an Austrian economic standpoint.
It would be a great thing to see. And that's what the Austrians wanted. They wanted competing currencies. That's what Ron Paul has said over and over again. And it'd be interesting to see the internet make legal tender laws obsolete. And just as a further aside, during the Liberty Mastermind Symposium, Trace Mayer even said that the largest amount of Bitcoin is held by the U.S. government because of the seizures of Silk Road and a number of other entities. So the largest holder of the cryptocurrency Bitcoin now is Uncle Sam. What he's going to do with it, we don't know. But just as an aside, and if you want to get the video from Liberty Mastermind Symposium, just go over to libertymastermind.us. Got a great deal on it right now. It's something you don't want to miss, libertymastermind.us. Hey, John, your book really selling well for a self-published book. It really touches on a lot of these issues that we've been covering, which is why I wanted to cover them. And with you and James Turk, it's really an unbeatable writing team, isn't it?
Yeah, it's worked out real well so far, Kerry. And you're right. We do have chapters on the global currency war as it affects the emerging markets, and a whole chapter on cryptocurrencies. So yeah, we directly address a lot of the stuff that you and I talked about today.
Yeah, well, hey, book highly recommended. Tell us where we get it. Your website, John?
Yeah, I run dollarcollapse.com, and you can buy it through that site by clicking on one of the ads or one of the links that are there, or also go directly to Amazon or go to any bookstore. It's available there too. Yeah,
just buy it off of John's site. He gets a better cut. So it's only right. Just go to dollarcollapse.com. Of course, in the show notes on financialsurvivalnetwork.com, click it. You go right to John's site. To me, it's a go-to site. I look at it at least several times a week, if not daily. In fact, when I started getting into doing radio, John's site really got me into this, one of my go-to sites. John was one of the first people that I interviewed when I started radio, so I'm grateful to you, John, and continues to be one of the people that I look up to, because John's really... you don't get garbage on John's site, conjecture. John's articles carefully reasoned out. You don't pretend to know things that you don't know. And, that's what you want. Like, one thing, John, when you say you don't know something, if you know something, you say you know it. If you don't, you don't. And that's the way I've always tried to be on here as well. Careful of conjecture, careful of speculation. It's okay to say, could this be true? Maybe. But don't pretend to know something that you don't know or can't possibly know, or have these make-believe sources, which so many people out there, they seem to propagate like it's unbelievable. You know what I mean? It's just out of control. Yeah. Well, great, Kerry. Thanks. Yeah, and I agree. There's an awful lot of speculation out there. And crazy times breed a lot of wild ideas. And so, you do a great job of separating the stuff that we can kind of know from the things that we can't possibly know and shouldn't speculate on. And I think that's an important service that you're providing for your listeners. Hey, well, we try, as do you, John. And we'll talk with you again real soon. Thanks again. Great. Thanks, Kerry. What happens if the collapse never really comes? You need income, and Jason Hartman can help you get it. He's helped thousands of people realize their dreams of financial independence through real estate investing, and now he's got an unbeatable offer for you. He's offering my ebook, Forget Wall Street, Go for the Gold and Silver Too, for free. Just visit jasonhartman.com/Lutz. The first 100 Financial Survival Network listeners will get the book free. Remember, you can't afford to put all your eggs in one basket. Real estate should be part of a balanced investment portfolio along with gold and silver. Just go to jasonhartman.com/Lutz and sign up today. When it comes to real estate investing, Jason Hartman is the only person we trust on the Financial Survival Network. So make your money work as hard as you do by building an income property empire. Real estate is America's proven investment. Go to www.jasonhartman.com/Lutz and get your free ebook today. That's Jason, HARTMAN.com/Lutz. That's Jason, HARTMAN.com/Lutz. Jason knows how to help you retire with a portfolio of income-producing property. Go to jasonhartman.com/Lutz.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.